Hi everyone, and welcome to this morning's Forex webinar for the London session. Good of you to come along. As you know, David and I took a break last week, and but we're back in, as we say in Italy, we say back in carrozza, which kind of means back in harness, as it were. It was lovely to have a few days off and just do some stuff with the family and in the garden, etc., etc. Who's rolling his eyes over me at the other side of the table. However, before we start, may I draw your attention to the disclaimer that I know you can see on the screen. As you know, this can be a very risky business, so please don't ever think of using money that you cannot afford to lose. I can see from the attendee list we have some of our quantum customers, we have some people who have bought the forex program, and I think I recognize one or two people who very kindly have bought some of the books that I have up on Amazon. And if this is your first time to this session, this is me, and I run it together with my husband David. He's sitting, as I said, opposite me, and we look at the markets through the prism of volume price analysis, supported by our fantastic quantum trading indicators. And just to refresh, in case you haven't seen this up on Amazon, everything about Forex has now been bundled together in what we call the complete Forex trading library. It's not a physical set of books, it's the digital version of the books, and it's $9.99, but it really explains our approach to this market. As I said, that on the technical analysis side, based very much on VPA, but you also have to take account of the fundamentals and also what is happening in the related markets. And after yesterday's FOMC, we just have a perfect example of how the market reacted to, according to those factors, and we'll look at that again in more detail. What we'll also look at in this session, and I'm going to carry this through to the two further sessions that we have later today, is it's really in response to one particular email, but I've had this question asked before to do with volume price analysis and also the structure of a chart. That is congestion. Given that markets do spend a lot of time consolidating, stuck in ranges, how do you kind of distinguish, well, what kind of congestion are you looking at? Because not all congestion periods are phases of price action are the same. They're all preludes to what is likely to be happening, what is likely to happen next on the chart. So we're going to have a look at that, as I said, using VPA, looking at Wyckoff's second law of cause and effect, and also some of the indicators that we've developed specifically to help us identify, well, what exactly are we looking at the moment on the chart, not only on the chart that you're looking to take a trade, but in multiple time frames, which is also hugely important. Right, there we are. Relational analysis. This is something that David and I'm going to say we've developed it. We can't claim ownership of this view of the market in looking at the inter-market relationships. We've called it relational analysis. You may have heard inter-market relationships, cross-market analysis. What you have to factor, what you have to consider when you are looking to take a trade is not just what you see on the chart, but also what is going on in the other markets as well. And again, we'll cover bits and pieces of this in this session as they become appropriate. So there we are. And because this is Forex, we also have, these are the specific Forex tools that we've developed for this market, the currency strength indicator, matrix array, and currency heat map. And again, we will show how these indicators, they really help us not only find potential trades, but also tell us what is happening to maybe our particular currency and currency pairs that we are looking to trade. Now, I'm going to pass over to David, and then I'm going to talk a little bit about, this week is a little bit peculiar in as much that yesterday we had May Day. The Japanese Forex market is actually closed all week. The stock market is open, but the FX is closed. It's there. They call it Golden Week, David? Their Golden Week holiday. I think it's also coincided with the inauguration of the inauguration of the new emperor. So you've had a huge dollop of liquidity just removed from the market. And again, it's, how does that impact analysis from, well, analysis per se, but also particularly if we are going to use volume to help us with our trading decisions. But I'm just going to pass over to David and we'll cover those topics in more detail. And of course, we've been looking at the charts and what's happening today. I think it's all to do with the British pound. So as always, lots and lots of things going on. If you've got questions on anything we say, please put them in the chat box and we're happy to answer them on air, or we'll do it to type it in the chat box. Feedback, whatever it is that you would like us to cover.
Thanks, darling, and a very warm welcome to you wherever you are in the world. It's an absolutely glorious day here and glorious morning here in Hampshire. The sun is shining and it's not very warm, but it's an absolutely beautiful day. So lovely May Day here. So I hope it's nice where you are too in the world. Great to have you here, and if this is your first time, then a very warm welcome. And I can see we've got a lot of regulars in the room too, so warm welcome to you also. William, I think everyone can hear us, so I'm not sure if it's something to do with your system, so hopefully you can sort that out. May just be a setting on your desktop or something where you've got the volume turned off on the GoToWebinar. But can you hear me okay? Yeah. Can you hear me okay? Yeah. I think everyone else can hear us okay, so it must just be specific to you. Apologies for that. I'm going to pass back to Anna. If we're going to focus primarily on the platform of, are you on MT4 or MT5? I'm MT5 this morning. I've got the NinjaTrader platform running on my side. As Anna said, if you have any questions, please just drop them in the chat box. We're happy to answer them there. If they're short ones, longer ones, we'll answer on air. So we'll flip-flop between the two platforms. As I say, Anna's on MT5. It's a great place. It's a great multi-asset platform. If you've got MT4 and you haven't looked at MT5, I would urge you to do so. The two platforms are very similar. It's just that it opens up a whole array of different markets, whereas MT4 tends to be forex specific. MT5 is multi-asset. So you'll have all the other markets that you need to keep track of. And in particular, it also gives you the option to just, as Anna mentioned on the relational analysis, it'll give you the opportunity to have those markets, indices, for example. You can have them running on your platform, which is just a lot easier than skipping about in terms of the internet looking for it on investing.com or wherever. I'm going to pass back to Anna and we will get going.
Let's just look at this question of liquidity, and as I said, with the Tokyo, just the FX market is closed. I actually put a link up on my Facebook page here. Some of you may have seen it, and that is, where is it? Here we are. Yes, this was about this week, because, as I said, Japan is just Japan on its own accounts for a very large percentage of the trading in the Asia Pacific session. But just to give you an example of what I mean, now this is all very distorted because for some reason here, this is the tool over at my FX book. Yesterday at 9:45, this was the liquidity that sort of rushed into the market. It was, as you can see there, 3,748, 0.18% above what is normally, expected. The current liquidity is only 93%. It should be an average of 130. This has obviously distorted all these numbers down here. But if you just scroll across here and just keep an eye on those numbers up the top there, 3 p.m. you could see 231. Yeah, that's normal. Then it sort of slides, it goes up and down as we approach the London fix, which is 4 o'clock, and you've got there 4:15, 191. But look at the overnight session. Coming into the overnight session, this is at 10 o'clock, then it goes over at 15, 69. So you can see here immediately just the level of liquidity and market participation because of factors, as I said, this holiday period. Now we're ramping it up slightly. We've got here 6:30. This is Europe. Most of Europe was closed yesterday as well because of the May Day holidays. And where are we now? 7 o'clock. We had 215. Where are we now? 69. So it's very, very variable. So when you get this very patchy liquidity, or you get these liquidity spikes, it's a bit like trying to trade in around sort of Christmas holidays. You can get you get sort of two extremes of price action. Your price will go nowhere, That's it, because there's just not enough there, not enough participants, liquidity. Or when you get an inrush, you will get volatility and you will get price spikes. So it's just something to be aware of. It's not going to, it's not the norm. It's just one of those, it's just a combination of events that we have to deal with. And that we also have to factor in the liquidity and the participation of the different centers. New traders, because they've read the marketing hype about this market, is that it is a 24-hour market, and it's somehow in the 24-hour cycle, you have equal participation. It's going to be the same, regardless of what time of the day you turn your computer on and you're going to take a trade. Well, it isn't, and and first of all, depending on the session, some currencies will be more traded than others. They're local, the currencies local to the time zone. That's the first thing, and also the number of traders that are around at that time. The deepest liquidity is obviously when New York, because we have three major centres. We have New York, the UK, and Europe. But as those of you who have been trading for some time will know, whatever happens at London, price might be going up in one pair. Come New York, those traders will put their own interpretation and their own spin on what they see happening on the charts. And of course, you've got the fundamental news. So this market is not simply straightforward. Let's look at a chart, regardless of the time of day, regardless of the session that we're in, and we'll try and take a trade. It is a little bit more complex than that. It's not complicated, it's just complex, but there are factors that you have to consider. Now today, what are we looking at today? Have I got the time? Yep, 9/7. What's my date always? I'm always puzzled by Forex Factory, and I don't know why the timestamp seems to deviate. Anyway, there we are. We're up to date now. I'm back now. Yeah. So we can see here the prime news event today is obviously surrounding the British pound. And mercifully, we are being spared the usual Brexit news and data flow. Everyone seems to be taking a break. I think it's all back on the agenda next week. So we're kind of back to more normal fundamental news. However, it has to be interpreted through the Brexit lens. These are all the PMI numbers, and I've said this in the past. These numbers here always used to be red, David, didn't they? They always used to be a high impact. Certainly not so much the individual ones, the Italian, the French, and the French, but the German ones certainly used to be, and the European ones. So those numbers will be, the markets will be waiting for those as well, and we'll see what happens to the euro. But as I said, the main event is to do with the British pound, and we will see what's happening to the British pound as these releases come. And we'll actually be back. We're back at 1:45, aren't we? Yeah, that'll happen. So we'll see what happens there. Right, as it's the British pound. What have I got here? Let's have a look. Let me just do something here. Dock that. Let's move that out of the way. One thing really I like about MT5, there's lots of things I like about MT5. First of all, you have this huge selection of time frames that you don't have on MT4. As you can see down the side, you much a bigger selection. But you also have what's called this docking facility, where basically you can move charts out of your profile, which is not possible with MT4. So can make your profiles very very cluttered. So what we have here is what we call a matrix of the pound pairs, and we can see here the 7. It's a little bit squashed at the moment because I have to do that for the webinar, and it's really to give us an overview of what is happening with the British pound at the moment. This is the daily charts, just to give us some context, and we can see here there has been some very brisk buying of the British pound, which looks like it's carrying on at the moment. Now, if you have a British pound pair that you like to trade, fine, you go ahead and you go and look at your preferred pair, whether it's the cable or whether it's pound yen or one of the others. But the advantage of looking at it in, if you like, what David and I call its matrix, is how is that actually performing in terms of its peers, if you like, the other pound pairs. And this is the way you do it manually. You'd actually set up all these charts and you eyeball it and you say, yeah, okay, I can see maybe what's happening with cable here. Well, we see cable. This is what are we seeing on the daily chart on cable. Let's just expand that. Yeah, it's, you know, we had this nice up bar here with reasonable volume underneath it. Then yesterday we had this. It looked like it certainly during the morning there was continued pound buying, but then we had the FOMC yesterday, and that was knocked back quite a lot because the dollar was then bought as a result of, as I said, the FOMC. Now what's happening today, we have the price has gone back into the spread of this candle, but it's still looking reasonably bullish, and I'll show you how that appears on the CSI and also the matrix indicators that we've developed to help us with this type of analysis. It just cuts down having to look at all the pairs individually. So we can see with cable there, we see a little bit of bullish action. But actually, if we come over here and look at the pound against the Swiss franc, you can see here we had some weakness yesterday. It looked like a little doji candle, and we've also got the buying back against the Swiss franc. Now, what does that what does that do for you? What it does for you is by looking at the way, as I said, if you just trade cable, it tells you what's cable doing compared with the other pound pairs. And if it is cable, you can say, well, why is cable perhaps not moving as much as one of the other pound pairs? And that is because in this market, you have rotation. You have pound buying, you can see pound buying, but not necessarily in the pair that you may be focused on. You will see it in one of the other pairs, and then it may rotate back. Now, to save looking at all these charts, and we can see here also against the euro pound as well, and also the pound yen. This is one of the reasons, of lots of reasons, why we develop these indicators, and that is the currency strength indicator. This is the one we always start with. I'll just move that up a bit. I've actually put this together with the matrix. This is, if you like, the graphical representation of what we're seeing on those individual charts. We're seeing the performance of the British pound in its matrix. Which of the British pound pairs are being bought the most, and which are being sold off the most, as it were, and then it allows you to rank them. Now I've got the 30-minute chart here. Let me just reduce that. What time frame are you looking at, darling, on the pound buying? Are you looking at something like the 20-minute or so?
Right the way down, but from fastest.
Okay, all right. Well, let me just take that down a notch. Let's take it to the click the wrong one. Hold on. Let's undock it. The only thing about the docking is when you push it back into your profile, you have to what's called undock it, and then allow it to. Then you can change the time frames. There we are. This is the 12-minute. Here we are. Okay. Okay, let me just move that out of the way for that. Now we can see here, this is a strong buying of the pound. This is the move in the pound that we've been watching this morning, and you can see here as sold off and then come back up again. But what that doesn't tell you, it tells you there's strong buying of the pound. But what you want to do, if the pound is the one that you like to trade, what's it being bought the most against? What is the best counterparty currency? And this is where, as I said, you can do it manually, you can eyeball it by having all those charts up. But if you put the matrix up on the same chart here, what you do, it's got a very neat function here. That's it. This is the matrix per se, and it tells you which of the 28 currencies is being bought and sold, and it ranks them, if you like, in terms of the amount of buying and selling. So you've got the pound New Zealand at the top, and you've got the euro pound now that's jumped down the bottom. So it actually confirms to us that the pound is the one that is moving the most in this particular session. But what you can do, if you just click pound here, it actually ranks them. So it saves you having a look at all those charts. And what did we pick out? I actually looked at the pound Swiss, but in fact, the biggest move has been against the New Zealand. It's not by much, but you can see the difference in these values here, but the pound Aussie is down. And where is cable? Now cable is very heavily traded, but as you can see here, it's not really doing very much. So if you were a cable trader, you would simply have to wait. There is still good sentiment towards the pound, but because there is not an equally sort of negative sentiment against the US dollar, that's the reason why that really isn't moving very much. And in fact, it looks like it's going in the opposite direction. Now, when they're in the middle like this, the chances are it's probably in some kind of congestion. We'll talk about congestion as well. It's not going very far. And if you look at the lines as well, the other way to determine is whether the lines are diverging. And that's what you always want to look for. You want to look for strong divergence, crosses, but if they're going in the same direction, then there's not an awful lot of divergence, and the chances are, you're going to have to be patient and wait until you get a divergence. And sometimes you don't. Sometimes, it's not an equal amount of buying and selling in a particular currency across its matrix. So I hope that explains that. David, do you want to add anything to that, and then move over to you? Is that okay?
That's okay.
Okay. What do you want to see? What do you want me to bring and put up?
That's fine. We can leave it there for a minute.
Okay. Move that out of the way.
You're off on.
Oh, sorry. I turned myself off.
I think Anna's turned herself off now. Just to, can you pull? Have you got the doc? Have you got the CM? Yeah. The one you had. That's the one. Yeah, that's fine. And really, just to pick up on what Anna was saying there in terms of the matrix and hunting out the opportunities, it really is about that, and it is about the tactical approach you wish to take to market, because what we've got going on at the moment, certainly in terms of the 12-minute at any rate, is, as Anna says, we've got strong buying of the British pound on the yellow, which is rising strongly, and that is counterbalanced with you've got a variety of pairs. You've got the Swiss franc, which is the green line, you've got the New Zealand dollar, which is the white line, and you've got the euro, which is the orange line. And in addition, you've also got the Aussie dollar, which is the blue line. So each of those would be potential candidates. The issue now is that this is a trend that is, there's several factors here. First of all, this is a trend that's already well established in terms of these fast time frames, certainly for the pound at any rate. So the question at that point is, are you a trend trader and you're quite happy to jump into an existing trend and take whatever that trend has left to deliver? Or are you more comfortable being a reversal trader, for example, and waiting for reversals to appear? There's no right or wrong answer to that question. It's just what suits you, your temperament, and also the risk management that you will apply, because jumping into a trend that's already underway carries less financial risk purely because your stop loss will be that much tighter. Because the trend is already moving, the train's already left the station, it's underway, there is momentum in the move, and therefore your stop loss can be that much tighter to whatever position you take in the market, because that trend is moving. If you're going to take a position in the market which is based on anticipated trend direction, in other words, a reversal from one direction to another, that carries higher financial risk, because you have to allow the stop loss to be set at a greater distance away from the position, purely because the reversal may not happen instantly. There may be a certain amount of congestion builds as currencies get to these extremes, but ultimately that reversal will occur. It's just a question of when, and in waiting for that to happen, you have to build that into your risk and money management by setting your stop loss that much wider, which you may not be comfortable with. The payoff, of course, is that if you take reversal trades, then you get into the reversal early. In other words, you're sitting on the train, you're waiting for the train to leave the platform, and it slowly gets underway. So you haven't lost any of the journey. You can maximize the amount of return from that particular segment of trend in the reversal. Whereas when you're jumping into a trend that's already underway, you've already given up maybe a third, maybe even a half. If you're jumping in on a cross, for example, where one currency is rising strongly, it's crossed over into another which is falling equally strongly, then just ballpark 50% of that trend has already happened, so it's gone. You can't claw that back. So you're jumping in, you've only got maybe 50% left, and maybe even 30% by the time you get out, when the trend gets to the point of congestion at the top or the bottom of the indicator. So those are all the factors that you have to consider. And in addition to that, we've now got London Open, and what invariably happens at the London Open is two things. First of all, you'll see volatility as London gets underway. Well, three things actually. First of all, you'll see volatility. Secondly, you see this huge spike in volume. So you've then got to recalibrate your volume analysis to the fact that we are now trading in different sessions. So we've come through Europe, where we've had an increase from the Far East. Now we're trading into the London session. So you're going to see an increase in volume, you're going to see an increase in volatility, and almost invariably what happens is you will see reversals occur at the session crossovers. You see this at London and you see it in the US. Just to round off on what I was saying about the CSI and pairs to look at, in terms of what we're looking at right there on this, we're still on the 12-minute, I think. Sorry, 6-minute we've stepped down to. But if you look at the pound, it's now traveling alongside pretty much the dollar and alongside the yen. So if you would look at a pound dollar, or you would look at a pound yen, or indeed you would look at a dollar yen pair chart right now on this time frame, those pairs would be in a semi-congestion phase, because there's no divergence of buying and selling sentiment to drive that particular pair. And until those currencies separate and move in opposite directions, that will be the status quo. So in looking at the CSI, it's not just about identifying opportunities, it's also about identifying those pairs that have no interest because they're probably in congestion. There's a whole myriad of things. The steepness of the line tells you about strength. If the currency is moving sideways, it's telling you it's in congestion anyway. And if it's not rising strongly or falling strongly, then there is no momentum in that particular pair. Now down at the bottom, literally as I'm talking, you can see there the white line, New Zealand dollar. That is now starting to kick up. It's got down to an oversold. It's been very heavily sold throughout the overnight session. It's now deep into, well, it's moving down towards the oversold. It hasn't actually reached it, but it's decided to kick up a little bit. So now we're starting to see, in terms of the pound New Zealand, if that's the chart you were looking at, what you will be seeing on the pound New Zealand is you would be seeing a little bit of congestion develop, purely because the pound and the New Zealand dollar are now traveling in the same direction. So it tells you so many things. It tells you obviously at the live edge of the market as well. I'm just going to pass back to Anna. Just going to switch. Okay, stick with the pound Swiss.
No, I was going to look at it.
Okay. Just bear with us a moment. Just going to switch over onto the NinjaTrader platform for a moment. You should be seeing my screen any second now. Hopefully you can. And there we go. I'll just move the chat box out of the way. There we are. So I've got the pound CAD up, which was not necessarily the strongest of all the pairs, but certainly one to consider. Just have a quick look at the CSI. Where are we? There we go. Let's go and have a quick look. This is the currency matrix on NinjaTrader, but it gives you the same information. This is on 5 minute. Just have a quick look at the CSI. This is on 5 minute. You can see here, this is the pound. We're now starting to see the Canadian. So they're kind of moving in the same direction. The pound is just starting to roll over a little bit. It's going to follow the CAD. So, you know, those two pairs, those two currencies rather, are moving in the same direction. Step up onto the 15-minute time horizon. We've still got strong buying in the pound. We're starting to see some selling in the Canadian dollar coming in. And this is always a factor. It's what is your time horizon? Because what you will see in one time frame may not necessarily relate to what you're seeing in a much slower time frame. It's one of the facets that you have to be aware of as a trader. You've basically got to focus your attention on the time frame that you want to be involved in for this particular trading opportunity, and really nothing else, because what you will see in a slower time frame may well be in sharp contrast to what you're watching in the faster time frame. So you can be a scalping trader on a 1 minute time frame and be bullish, whereas traders on the slower time frame will be bearish. That's just the nature of the business, and that is reflected in the CSI. And what you're looking for all the time is you're looking for this follow through. So if we're seeing a change in sentiment on a fast time frame, a 1 minute, 5 minute, whatever it is, if that then ripples through this buying that you can now see that's coming into the commodity currencies, or certainly the Aussie and the New Zealand yen at any rate, not so much for the Canadian dollar up here, but in terms of buying here, if this buying is going to follow through into the slower time frames, then you want to see this continue on 5, and then if we roll over onto 15, if it's going to carry through into 15, then it's going to kick up on 15. And that's what you're looking for the whole time, and that's the other reason for having multiple time frame charts, because what they will also reveal is that follow through in sentiment from one time frame through to another. As I say, this is on the pound CAD. I've got the 3 minute here, I've got the 5 minute, I've got the 15 minute over here, and I've got the 30 minute down here. And really this just reflects the point I'm making here. And there are also several other factors as well, given that we're moving into the London session. We're now 6 minutes in, so we expect volatility, we expect pause points, we expect reversals, because it is an ideal opportunity for the market makers to trap traders into weak positions, and you can almost see that developing in real time. In terms of, just pop this open full size, makes it a little bit easier to see. This is London. This was the open here, 8 o'clock. Great thing about NinjaTrader platform is you get real-time delivered timestamp, so it tells you where you are in the world precisely at the right time. Not so easy with MT4 and MT5 because they tend to be delivered off the server times and not to your local times. But at any rate, this is London Open. This is the Far Eastern Asia session. You can see over here the volumes are now compressed because we've had Europe come in, the volumes rise. Now we're into London, we're seeing the volumes rise still further. We had this big spike here. It's no surprise to see this particular pair pause. Why? Because we've got a ton of volume coming in. The price action reflects the fact that there is a certain amount of weakness here. We've got a wick to the upper body, lots of volume coming into the market. It hasn't really gone anywhere. If this was a good strong buy with lots of buying on that volume, then this candle should have closed certainly without a wick and a lot higher than it has. So we're expecting a pause point. In addition to that, we've also got the VPOC indicator. This yellow dash line here is the fulcrum of the market right now. In other words, on the volume point of control, it is telling us that we have, first of all, the heaviest concentration of volume, which is way out here. So this is where the market is in price agreement right now for the time being. And until we get a confirmation of sentiment, either bullish or bearish, then that is where it's going to sit. So we expect congestion. We're expecting it because we're at the volume point of control. This is the fulcrum. In other words, the bullish and bearish sentiment is in balance, if you will. There's no, excuse me one moment. Sorry, just had a frog in my throat. There's no bias one way or the other, so the market congests. Just pop that down again, and we'll go and look at the 5 minute. This is the 5 minute. Similar sort of picture here. This is our volume coming in on London. Tries to rally, wick to the upper body. You know, there's a certain amount of weakness here. We also saw it reflected in the run up to the London open here. We also had some weakness coming in here. Decent volume under that one, but the market's really not interested in carrying on further through at the moment. In addition, again, we've got the volume point of control here, so you know we're expecting congestion. This blue dash line above is similar in many ways to the support and resistance indicator on MT4 and MT5. It's basically looking at levels or regions of price action which have been tested and retested and therefore have built into areas of price resistance or price support. In the case of NinjaTrader, the indicator actually displays these graphically by the width of these lines. So the wider this band, if you will, then the stronger is that region. So this market coming up to test these levels, first of all, we've got the volume point of control. So we've got a ton of volume sitting around here, which is going to act as resistance in its own right. And secondly, we've got price-based resistance on this blue dash line, which is pretty heavy, and therefore for the market to get through this these barriers, these obstacles in the way, volume-based and price-based, it's going to take a real amount of effort, and that's where the volume comes in down the bottom here. Now, the other thing to notice about this particular rally right now is what I was saying earlier on. It's about the follow-through of trend. We've had this decent trend develop for around about half an hour. It's reflected on the trend monitor here on 3. It's reflected on the trend monitor on 5. But that sentiment that was very bearish towards the pound CAD and really only reflected in these last 3 candles has not yet followed through to the 15-minute. If it does start to follow through, then the trend is going to develop more strongly because it's come through from a fast time frame into a slightly slower time frame through to an even slower time frame and ultimately right the way down to this chart at the bottom, which is the 30-minute. Now, you wouldn't expect the trend monitor to transition here, and it hasn't, and you wouldn't expect it to transition on 15, but what you would expect to see on 15 fairly soon is possibly a shift to one of these transitional colors, the darker blue or even the darker red, reflecting the fact that this sentiment towards the British pound remains intact. It remains pretty strong. Now, on the 30-minute chart, that gives us another view, if you will, of life in a slower time horizon. You can see the buying that came in under this candle. We had an increase in volume. This is halfway through Europe. Good volume under there. Big wick to the lower side of the candle. So we can infer from that there is strong buying coming into this market, because if there wasn't, this candle would have closed down here. It hasn't. It's closed halfway back up the width of the body. So we know for a fact that a lot of the volume in here is actually buying. The buyers have come in, the market's fallen, the buyers have stepped in, and the market's risen again to reflect the fact that this indicates more buying than selling. And lo and behold, on the next candle, we get good strong buying. We get a nice up candle on that particular one. Little bit of a wick to the upper body, so there is some selling there. There's no great surprise because we're approaching the volume point of control. Now what we're seeing is we're seeing a pickup again in potentially the sentiment towards the British pound. Let's just pop that up full size again. Starting to see that develop. What did we see on the last candle? That's okay. Nice little wick to the lower body, so we've got some buying in there. Decent volume under the candle, not a big wick to the upper side. Now we've got some a region of price resistance which has come in here. You can see this red dash line. This is telling us there's some price resistance to be breached, so we need to see decent volume. If we get through that one, we just pull that down a little bit. There we go. There's a minor level here, this blue dash line at 175.48. But if we clear this one, we should get through that one, because that's less important than this one, purely by the fact that the dash line, which hopefully you can see here, is very narrow. So in other words, this region here is stronger than this region. So if we get through this red dash line, 48 should be a level that can be taken out relatively easily. And finally, just to round off on the support and resistance aspects, we are now approaching on the volume point of control an area of low volume. In other words, we've got a low volume node here. What's the anticipation? What's the importance of that? The importance of that is that the fact that there is very light volume, and in a way it represents exactly the same principle as the price-based resistance here. This is light, the volume is light, so both of these should offer very little in the way of resistance, and therefore, all things being equal, we should expect the price to move through there relatively rapidly, because there's very little in the way of barriers to further progress. So that's on the 3 minute. Let's hop down onto the 5 minute, see where we're going on that. What's nice about the 5 minute now is if this candle closes off above this very strong level here, then below us we've now got a nice platform of protection, if you will, because this that was resistance is now going to become potential support for a move higher. So we've then built a natural platform for a springboard, if you will, to get through this level. In terms of taking a position, you might be comfortable taking it now. You might want to wait until it's through this region here. We've actually cleared all this price levels. Looks as though it may well do that on this particular move, but we have to wait till the candle closes off. We've got another minute or so before that does so. But once it's through here, as I say, we've got a good platform in place. moving up to this level. We've got a low volume node here, so all things being equal, we would expect it to move through there relatively rapidly. Up onto the 15, similar sort of picture really. We've got deeper volume up here, so we're starting to get away from this heavy volume here and up into these lighter regions here, so it's reflecting what's going on the fast time frames. We've also got a very strong level here of what was resistance. If the candle closes above it by any degree, then it's going to act as support. And you can see the volume is starting to build. This was Europe here at 7 o'clock. Here we are, 8:30. Okay, what have we got now? We've got a nice widespread up candle, supported by good volume. The volume is rising through from Europe, but then that's what you expect to see anyway. So you've got to be careful in the analysis to make sure that we're looking, this is London here for comparison, but a nice widespread up candle, only a little wick to the upper body. And again, it's down to comfort. Are you comfortable taking that position, or do you want to wait until it's really cleanly through these regions and a little bit further away from this area here perhaps, and then you've got a nice decent, more comfort in the move, if you will. And I've got the Renko running here as well. And if you've not used a Renko with time-based charts, I would urge you to investigate it, because what the Renko does, it really does smooth out the price action for you. It uses the bricks, and on both the Renko for NinjaTrader and also the Renko for MT4 and MT5, you have two options. You can either choose the brick size yourself, which is fine. You can say, I want to trade a 1 pip, 2 pip, whatever it may be, pip and a half. Or alternatively, you allow the indicator to set the optimal setting. Now, I've got this setting set to, well, this one's called the Renko Optimize, and what it does, it delivers the optimal setting for this particular pair in this particular time frame, and exactly the same on MT4 and MT5. So you are trading at the correct speed. In other words, you're trading at the optimal speed for that pair under these market conditions, because the other facet that very few forex traders, and indeed any traders, seem to appreciate is that these values change. The optimal setting for a Renko, or the optimal setting for a tick chart, in other words, non-time based charts, changes throughout the session. As the momentum speeds up and slows down, then you have to reflect that according to the chart, because if the market's fast moving, you want to move at the same speed. If it's slow moving, you want to move at a slower speed. So it's not a case of one size fits all, where you just simply select a brick size and off you go. What this does is constantly calculate and recalculate. I've got it currently on 1.6 because that's the optimal setting it's telling me. If I set this back to and select the 1 minute again, it'll probably change it. I'm not going to do it right now because this is moving along quite nicely. You can see I've got the trend monitor below, which is a great help in keeping you in through the trades. Whether it's on a non-time based chart like Renko, or whether it's on a time-based chart, it's a fantastic indicator, because the reason we developed is to help you and to help traders with the hardest facet of trading, which is staying in a trend once it's underway. And it goes back to what I was saying earlier about whether you want to be a reversal trader, whether you want to be a trend trader. They have pros and cons, but both of them have the same issue, which is once you're in a trend, it's holding the trend and staying in there to maximize whatever it is, maximize your gain from that particular position. This is just a nice example. We had the run up. These are the trend dots. You can see they will always transition first. They are very close to the market. They are the initial sign of very tight intraday changes in very subtle but fast changes in sentiment close to the price action. Changes to the grey here, we get some a brief congestion phase here, then we carry on. Then we start to see some red ones. We've got grey, this is in strong congestion now, we're trying to rally, we're back down into red again, then we come out the other side, we're back up again. Again here you can see we didn't get any grey ones here, went straight into red as the market pulled back. We've got a couple of pivots here, pivot high, pivot low. Now we're back up into the trend again. What the trend monitor does, as you can see at the bottom, it hasn't reflected any of that. It's just simply said, okay, I'm looking at the trend. It's not weakening enough for me to signal a transitional change in color or even a total change in trend. Whilst the trend dots have signaled that for you, the trend monitor has remained steadfastly blue. In other words, it's helping to keep you in through the trend. And these are the most dangerous areas of price, because if you've got in on a trend down here and you're quite happily chugging away, then you get into this and you think, oh my gosh, I'm starting to see a pullback. I had some decent profit up here. Now it's starting to pull against me. What am I going to do? I think I'll close out and take what I've got. So you get maybe this bit here. Now, as the market moves away, you're sitting there regretting that decision, thinking, I've given up all of this. I've lost all of that. And, you know, what a fool I've been. I should have stayed in. That is the hardest thing to do in trading. There isn't anything harder to do. If you can master that aspect of trading, you will make money, because trading is about taking small losses, getting out with a stop loss, which is reasonably tight, taking small losses, quite a few of them, and then maximizing your return on the big winners, staying in those trends that are strong, and taking the maximum you can out of those positions. And that offsets and outweighs all those little losses that you've accrued over time. So it's about big winners, managing small losses, and that is the principle, if you will, on which all trading is based, and moving your account forward. And that's why we developed the trend monitor, and along with all the other indicators as well. Just pop that out of the way, see where we're going on the volume profiles and what have you. Just go back up to 3. And if you're new to volume price analysis, I would urge you to not trade off, but certainly learn the craft using fast time frame charts, because and I can also make the point, the reason we focus on these faster time frames is not because we believe this is the only way to trade. It isn't. It's because obviously the price action is fast moving. It gives you all the dynamics, because what you learn on a 3-minute chart in terms of VPA can be, it's exactly the same principles apply whether you're on a fast chart or a slow chart. So it just makes the learning process that much more real in terms of, and speedy in terms of looking at things as they develop in real time and reading the chart in real time. Still moving high with this move, which is nice, supported by the trend monitor. We've got decent rising volume here. We've got rising price, so that's all in agreement. A little bit of weakness coming on this last candle. It's got a half decent wick to the upper body here, so about a third of the candle there. But as always, it's no great surprise, because traders in here will be making money quite happily, and quite a few of them will be cashing out here and saying, okay, thank you very much, I've scalped a load out of the market and I'm out. So they'll be closing out. But in terms of longer term, there's nothing at the moment to suggest we're going to see a reversal off that particular position in the near future. What we are seeing, though, which is a little bit worrisome, and it is the reason that you have multiple time frames. This is the 30-minute. What are we seeing on the 30-minute? We've got volatility. We've got volatility triggered here on the candle. These little purple arrows top and bottom are telling us that the volatility indicator has triggered. Why is that important? It's important for 2 reasons. Firstly, it's self-evident we've got volatility. Secondly, it's also indicative of the fact that the market makers will now be participating. And when you get volatility, volatility is there because the market moves at speed. And what speed does to you as a trader is it drags you into the market and then gives the market makers the opportunity to trap you into weak positions, which is why invariably after volatility has been triggered, you will see the market congest or indeed even reverse off that particular indicator. The nice thing about it is it triggers in real time. So as soon as the conditions be met, that this works on average true range. So it's looking at the norm, if you will, for price action on that particular currency pair on that particular time horizon. And if it moves outside of that range, the indicator is triggered in real time, doesn't have to wait till the candle's closed. So you get the signal straight up as the condition is met. You don't have to wait. So as soon as you see that signal arrive, you haven't got to wait for the candle to go, because this has got another 6 or 7 minutes to run. You know for a fact you've got volatility coming in. Now that may be enough to prompt you to close out the position. Again, that's a personal, from my own perspective, certainly if I get these signals, I'm trading and I get them on the time frames that I'm interested in, invariably I will close out, because I'm expecting congestion to build at the very least. I don't particularly want to sit through a congestion period. If it doesn't follow through into congestion and just follows through as normal price action, which happens, there's no guarantee that this candle down here is going to follow through into congestion, but 8 or 9 times out of 10 it does. And therefore, when I see one, I will close out because I can always jump back into the market. There's nothing to say I can't jump back in. If we get through this candle and it closes with the volatility and the price action then moves higher, fine, just jump back into the market. So what? What have you lost? Maybe a little bit here. So what? We'll see what happens. But that's the reason, another reason of having multiple time frames, because every single time frame will give you a piece of the jigsaw puzzle to fulfill. And then finally, write down on the daily chart. Oops, sorry, where's that gone? Where's my daily gone? Lost the daily, there we are. Let's just move the chat box out of the way. That's it. I just wanted to click on there to maximize it. There we go. Just the daily chart just gives you a heads up on where we are in terms of the slower term picture. We've got the volume point of control here. What's nice about today's price action, certainly for this pair at any rate, is you can see here we have this very strong level again of resistance, which we actually got through yesterday just about. It's been tested this morning, but it looks like it's holding. So we've got a very nice region in here, which is helping to prop this move up. And moving up the chart, looking at it from a longer term perspective, you can also see here we've got a transition here through to bright blue, which is giving us a clue that you know, the sentiment towards this pair is changing as well. In terms of the longer term perspective, then, you know, if this move develops today and perhaps into tomorrow, then as we move up here, we've got lighter volumes ahead because we're moving away from the volume point of control here. We've got a relatively light price-based resistance here ahead. So all things being equal, decent volume. You know, this pair could rally all the way up here, but we have a lot of congestion over here. So whether it gets through that longer term, who knows? But certainly from a daily perspective, looking at it from an intraday perspective, you know, this is all looking nice and positive for us, holding this position for the time being. We still haven't closed off this 30-minute candle down here. Got another 4 minutes to run, but we know we've got volatility, so we're just keeping half an eye on that. Just looking at the volume profiles building here. We've got a little bit of low volume coming on that last candle there. Nice volume there, but you know, the buying is dropping away a little bit on that one. But it's not out of balance. It is in line with the price action. Price action is relatively narrow. If this was a big widespread up candle and we had this volume under here, then that'd certainly be an anomaly. But in terms of price agreement, it is pretty much in agreement. It's narrow. We've got a decent wick to the lower body, decent volume under there. That's fine. And we'll just see how this next candle develops. Could develop into a doji, which it has. We've got almost a long-legged doji here. Not quite equidistant, but doesn't have to be exact. Very narrow body. Wicks to top and bottom. So we're starting to see a little bit of indecision coming into this market now. And again, you know, we're keeping an eye on this down at the bottom here to see how that develops as well. Let's just head back to the CSI and just see what's going on there and the other indicators as well. Let's just go over to the CSI on 5. There we are. Just wait for that to load up very quickly. Just flick that over onto 15. There we are. Back to 5. There we go. Still got this pound buying. And, you know, this is the CAD, this is the Canadian, this is what we're witnessing right now. That's why we're seeing a very nice move develop. This is on 15, so we've got a little bit of a way to go here. Further direction for the Canadian to fall. We've got, in other words, we've got more distance for the CAD to fall than we have for the pound to rise. But nevertheless, that's still, you know, nicely developing. Just isolate out the pound on the matrix. This is on 15. We're on the pound CAD, and actually, you know, the one that's moving more strongly, you can see here right up at the top, is the pound Swiss. So, you know, we're on the pound CAD. There's a decent move on pound CAD, but certainly in terms of pound Swiss, you know, that's the one that's really got some momentum as well. So it's horses for courses. But to be honest, probably setting aside the reason the pound yen is here at 3.50 or 3.48, as opposed to the pound Swiss up here roaring away, is purely this again. It's because the pound is rising, and the magenta line here, the yen, is also rising. So they are. The analogy I always use, which I think is a simple one to think of, is having two trains leaving a station on the same track or running along on the same track. They may be running at differential speeds, so there might be some differential momentum there. But in terms of the actual speed that they are traveling between the two of them, the differential speed, there's not a great deal of difference because they're going in the same direction. So you might get a very minor trend purely because one is traveling faster than the other. But in point of fact, they are not the pairs to consider because they're going to be ranking mid-table. The pound dollar is another one. The dollar is just starting to roll over. That may develop into a trend where we've got the pound moving up and the dollar moving down. But for the time being, it's not particularly strong. Pound CAD's okay, that's moving up to the table, but it's these guys down at the bottom that are really moving the strongly. You've got euro pound down at the bottom here. You can see a very strong selling of the euro right now and a counterbalance with strong buying of the pound. Just over onto the currency array, we've not really looked at this morning. I've got this isolated out on the euro, and that's the reason you've got the euro pound down here with the strongest selling on the euro and the strongest buying on the British pound, and that's why it's down at the bottom of the ranking ladder there. Just head back to the charts now. I'll pass back to Anna again because I've been rabbiting on a long time. There we go. And that's a very, very solid move. Very nice move. What's also nice now, as you can see, we've got transition through to trend monitor on blue. So we've had the complete follow through from fast into, let's call it our medium speed. And let's say this is our slowest speed. So we're now down into 15. Really nice move. And that's now reflecting the fact this trend is really following through for the time being. However, another word of caution. We've got volatility here on 15. So it's just giving us a heads up, be careful, maybe time to cash out. You know, we've had a decent run, we're seeing volatility. The expectation is maybe we're going to see retracement within the spread of the candle. We'll just have to wait and see, and that's a personal decision you have to take as a trader. I'm going to pass back to Anna.
And I've stayed with the pound matrix, manual matrix that I set up, and I've actually moved them all to 30 minutes because while David was speaking, the volatility trigger, the volatility indicator triggered in. It always triggers in real time. It actually came in on the Swiss, the pound Swiss. It came in on the pound CAD, as you saw there. It also came in on the euro pound, and also came in on cable. Interestingly enough. And in terms of timeframes for intraday trading, this is something you are going to have to work out for yourself. What do you feel most comfortable? That's if you're using just time-based charts. But what I've also done is I've done 3 versions of the CSI and the matrix, and I've put them side by side here. This would be on another screen. Let me just increase the size of that chart there, because it shows the movements of the pairs. As I said, it saves you having to have lots of charts on one profile. This is not where is it? When you want to do something quickly, that's it. Let's move that over there like that. And this really is a graphical quick reference of what is happening on the individual charts. Now, the time frames I have here, and it's just something that works, I found works very well, and I normally have a Renko, but let's just stick to time charts at the moment. This is the 30-minute. This is, if you like, you've got to have a benchmark on the slower time frame. Some people like to use the daily. The trouble with the daily is that the daily chart actually represents 3 separate time zones, so it's an amalgam of obviously of the 3 together, and you know it could be a little bit too far out if you're on the faster time frames. By all means, use the daily for context, as it were, but something like the 30-minute or even the hourly chart as your kind of slowest time frame, and then you go down to something you can. I have the 6-minute chart because I have the 6-minute chart available in NT5. A lot of traders like to use 5, and then I've got the 3-minute here, so it's a doubling, and then it's 5 times. I think Alexander Elder said, was it something like 3 multiples of 3 and 6, David, something like that. I think he's done some work on it. You can check it out on you know, from his books. But the 3, the 6, and the 30. Now what we're seeing here is the pound Swiss has pretty much stayed at the top of the matrix here. Since we've been on air, and if we expand that and look at it from the point of view of the CSI, you can see why. Let me just take all the others out because it's a little bit confusing. There we are. There. There we are. You can see here when you said about crosses, when we're talking about at this point here, they were moving in the same direction. There really wasn't any divergence, and we really had the divergence at this point here. And this is what we're witnessing on the 30-minute chart, and we're seeing a really strong move on the 30-minute chart, even with the volatility candle that has come in. And then what we do is, by looking at the faster time frames, is what you see on the faster time frames is you will see the oscillations within that move. Now, sometimes on the faster time frames, you'll see here, for example, we've got a potential reversal trade coming up, because we have the pound right at the top and we have the Swiss franc right at the bottom. And the decision for you as a trader is that if the 6-minute chart or the 3-minute chart is one that you're looking to trade, are you going to take that reversal trading opportunity, which is perfectly feasible to do, but you have to bear in mind that what you will be trading against is you will be trading against the much stronger sentiment that you have on the 30-minute chart. In trading, it is all about time. It's timing, but it's also looking at different time frames and how you are going to play what you are seeing on the different time frames against each other, as it were. Is it possible to take a reversal down in the faster time frames, a scalp trade, a reversal trade, even though you're going against the flow, if you like, that you see in the slower time frames? And the short answer is yes, but it depends. It depends on the spread. It depends how far any reversal is going to, you're going to carry that reversal. Is there going to be enough in there to be able to take that? Sometimes it's not, which is why you get traders saying, well, okay, I can see there's a strong move in the slower time frame, as we can see here, and it's just no, there's too much risk. But maybe on a what we call a pullback or a correction, let's go down to the 3-minute chart, you see, well, what do I see here? Do I see an opportunity to, as David said, to re-enter basically in the direction of the slowest time frame? And that is only a decision you can make at the live edge of the market, depending on what you see at the time. With regard to the pound Swiss, what's interesting on the pound Swiss, and we have a look at it, and we haven't really covered congestion, but we'll cover it in the next session at 11:45. If you can't come at 1:45, if you can't come along to that, just then watch the recordings, and we can see here. Can you hear me, David? Can you still hear me? Oh, that's fine. My headset's gone a bit peculiar. What we have here, if we go right back over here, we have a trend here, but we have a trend with volatility. You can see the number of volatility candles that were triggered in this move higher. Then we've moved into a congestion phase. What type of congestion is this? This is a congestion phase around the volume point of control. There is no clear bias. There's no clear direction for this particular pair, which is why we have the volume point of control. Volume, the VPOC, is where volume, price, and time combine, if you like, and it's the time that a market or an instrument stays contained. It stays range bound, and it's where the market is in terms of market profile. You can call it a value area, you can call it price agreement. There's nothing, traders out there, there's nothing to push this pair or this market in a strong direction, in one direction or another. Now, sometimes you get this at times when there's just not the participants. So this would be an Asia session where really the traders over in Australia, New Zealand, Japan, they're not really interested in the pound Swiss. It's not a local currency, so you would get, so there's no clear bias in one direction or another. At some point, there is going to be clear bias. There's going to be direction, and what is the driver going to be for that? Is it going to be technical? It could be a technical reason, or is it going to be some fundamental piece of news? And I know at the moment there's also Swiss news coming out at the moment. But here we are. The breakaway on this chart is here. It's away from the volume point of control. We have the candles. We have the up candles, quite strong, wide spread up candles. Volatility on this one, but you have rising volume underneath here as well. And it kind of confirms what we see on the matrix, where we have the pound Swiss right at the top and really refusing to roll over. So any trade that you were possibly taking on a reversal position down in the faster time frame just ain't happening at the moment. Now, if you're not comfortable joining this move because you consider it chasing price for whatever reason, then don't. Go and find something else. Go and find something maybe in a congestion. Go and find a reversal, as we see here, when we saw on the 30-minute chart, where we saw the buying coming in here and the candles that we have here, the start of a trend, start of a sort of accumulation phase that we have here. Don't force yourself to do something that you don't feel comfortable with. And let me just undock this, because otherwise I can't change the time frames. And if we move up the time frames, so we go on to let's have a look at the hourly chart. Where's the hourly chart gone? Lost it. When you're looking for something quickly, Dave. The thing I don't like about the 2, 3, 6 is that I can't see it, David. Can you see the hourly chart somewhere? It's ridiculous. I can't find the hourly chart down here. I got the 2. Let's look at the 2. That's easier. Let's have a look. Where's the hourly chart? I can't. Oh, here it is. Oh, I'm going blind. Yes, and on the hourly chart here, you can see that it's the pound Swiss is still here. The pound's is kicking up. It's very overbought, as we can see here. But look at the distance that the Swiss has to travel. It's got a long way to fall, so that could simply maintain the momentum that we're seeing at the moment. But for faster time frames, by all means look at the hourly. But I find the 30 is a good chart to consider. Let's just dock that again so I can move it out of the way. There we are. And on the faster time frames, let's have a look here. As you can see here on the 3-minute, it's still resolutely up here and overbought and oversold. It is going to, there will be a potential for taking a trade on the faster time frames, but at the moment, I would say it's just not happening on this particular pair. Do you agree with that, David? Yeah. We've got here on the 3-minute, we've actually got a sort of shooting star looking as though it wants to develop. Really, you need a lot more selling volume. And if you look actually at the bars, I think it was on not on this chart, but I think on the 6-minute chart that I had earlier on the down candles, there's not a lot of volume on the down candles, and it's just one of these moves that is pretty relentless, and you just have to say, well, you just move on and find something else. Do you agree with that, David? Is there anything else you want to say on that? No, that's it. We'll revisit the pound pairs later on, because we'll have had the BOE and all the other bits of fundamental news for the British pound when we come back later. So if you want to come along to that, you're more than welcome, but there will be, we'll record all these sessions anyway, and we will look at congestion in a little bit more detail. But it was such an interesting move on what we could see here, so we kind of left it as it is. Interestingly, for the British pound, if you're going to be trading in the afternoon sessions in New York, just make a note. The option expiry for the British pound, there's a very big one, 1 billion at 30.20, between 30.20 to 30.40. So you just keep an eye. If cable is one that you trade, then keep an eye on that. That also helps to explain why sometimes the price will look depressed, if you like, on a pair such as cable, where it's not moving as you would expect it to move, and that simply could be because there is this there is this option expiry. And also on the 30-minute chart with cable, what's interesting is what the volatility does is it also creates its own congestion period, and what we see here is this pair is actually still trading within the spread of this volatility candle. Volatility causes all sorts of results in all sorts of different price action. You do get reversals, but you also get congestion, particularly if they happen on the slower the time frame, the chances are the price will retreat and it will congest within the spread of the candle. And in fact, the volatility candle itself acts as a kind of support and resistance. So if you want to go short here, you'd have to wait until that really clears the bottom of that volatility candle, and it never did. Every time it tried to go through that, you actually got buying coming into the candle. And to the top, if it's going to carry on further, this is 39, it's almost 31, but within here you have this option expiry at 30.20, 30.40, so that is also helping, possibly helping to contain that price. So this market on the surface seems very straightforward, very, you know, it's just an up down bet. That's all you have to decide, but it is a lot more complex than most people realize. Okay, very quickly, and just to wrap up, the indicators, for those of you who have never come across them before, are from quantum trading, ones that David and I have developed for our own trading and now are available. And this is quantumtrading.com. And the individual indicators are here. You just click on the little icon, and you'll have all the videos, support pages on how to use, you know, different ways that you can use them. There's some examples, and of course you can follow us on the webinars as well when we look at the indicators in more detail. All the prices are there. You can buy individual indicators, there are bundle indicators, or you can buy the complete package. The advantage of the complete package is that when we develop new indicators, they are automatically added to your package. And in fact, the last one that we added is the pound. We have an index for the pound, which I haven't had up, which will also help to confirm strong buying for the British pound. But if you've bought the package, then that indicator is automatically added to your bundle. 7-day money back guarantee. And if you buy one and then you want to upgrade, of course, you will always get a credit. The education side, the forex program, is at quantumtradingeducation.com. Same principle applies. These are the modules of the program, but you get the indicators as well as part of the program. Anything else you want to say, David? That's it. Brilliant. We are back later. We'll carry on and looking at the pound and see what happens, particularly with the pound Swiss. Thank you so much for coming along. As I said, I know some of you come along later, so that would be lovely for you to have us, have you join us. If not, we will be back next week.